Today we're speaking with Bradley Jacobs, Chairman and CEO of XPO Logistics. Brad, in the recent weeks, you've gone through a couple of mega acquisitions. One is Conway Freight here in the U.S., and the other one would be Norbord Dentressangle in the EU, in France notably. What I'm hoping you do is detail for our 300,000 readers of Inbound Logistics a little bit about the capabilities of those two companies and also the other stars in the XPO constellation, what those units do and what solutions and services they bring to the market.
Okay. Well, good morning, Keith, and thank you for this opportunity. I appreciate it very much.
You're welcome.
So, pro forma for the Conway acquisition, which in principle should close in the next few weeks, we will be about a $15 billion revenue company in 32 countries. We'll have about $1.1 billion of EBITDA, and our goal is to raise that $1.1 billion of EBITDA to in excess of $1.5 billion of EBITDA within a few years. And we will be the second largest provider of contract logistics globally based on square footage. We'll have about 150 million square foot of warehouse logistics facility space. We will continue to be the largest provider of last mile logistics for heavy goods here in North America. This year we'll arrange about 12 million deliveries of television sets and ovens and white goods and home electronics, etc., into people's homes. We'll be the third largest intermodal provider with a leading position in cross-border Mexico. We'll continue to be the second largest truck broker globally as measured by net revenue, with over €1 billion of truck brokerage just in Europe alone. And we are the largest manager of expedite shipments in North America. We do that both through online auctions, and we do that through old-fashioned people working the phones as well. Now, with the Conway acquisition, we'll become the second largest provider of LTL in North America. We already are number one in LTL in Western Europe, where we have leading positions. They call it pallet distribution. We would call it LTL in France, in Spain, in Portugal, and in the UK. Also, once we close the Conway acquisition, because of the Menlo subsidiary, we will have about $2.7 billion of freight under management in our managed transportation group. And we have a growing freight forwarding operation too. So we have a full, comprehensive suite of transportation and logistics services, and we market them in an integrated way, in a highly coordinated way on a global basis.
You know, Brad, when Toto pulled that curtain back in The Wizard of Oz, we were told to never mind what's going on behind the screen. Now, what's behind the screen for XPO, I'm guessing, is a spaghetti bowl of different IT systems, and wrangling that and aligning all of that would probably take some doing, not only to provide performance to the customer, of course, which is most important, but also to provide the efficiencies that you're looking for performance of XPO. So the question is, how are we going to do that? Are we going to have something laying over the top of all of that and have the disparate divisions and systems link into that to achieve those efficiencies? Or are you going to work with, let's say, a lead technology group, let's say like New Breed, which has good technology, or Menlo, and kind of let them take the lead forward to do that?
We run the business in two segments, logistics and transportation. Mm-hmm. On the back office side, we use Oracle. And I'm proud to say that since we started the company in 2011 and through to this day, we close the books promptly and accurately every month. And we have standardized KPIs, key performance indicators and metrics, that we use to run the business in a very rigorous way. On the front end, on the customer-facing side, we do have two segments: logistics, which is a different type of IT than transportation, and transportation. On the logistics side, we got a tremendous amount of IT when we bought New Breed, as you mentioned a minute ago. Had about 400 IT professionals there, a very substantial IT budget. A big part of New Breed's business before we bought it, and continues today under the new brand name, XPO Logistics Supply Chain, is technology related, technology enabled, sophisticated contract logistics. So we like that system, and we continue to. It's a customized system. In our truck brokerage business, it's all customized. We, right from the beginning of the company, starting in 2011, 2012, we invested lots of money in our infrastructure, in our back office, and especially in our technology. And we roll out now literally 200 or more IT projects a year, and we get those ideas from the users, from our own employees and from our customers. And we pride ourselves on having the most cutting-edge technology possible in the business.
And so, as part of that technology, you've been called a visionary. Do you envision an integrated command and control console for customers to be able to have visibility and decision support across the length and breadth of XPO logistics?
Ultimately, yes. Ultimately, there will be one portal for the customer. But for the time being, running the business in two different segments, contract logistics and transportation, makes more sense. Now, eventually, even on the warehousing, even on the contract logistics, you have the inbound logistics, you have the outbound logistics. A lot of that is LTL, so that's going to integrate in with Conway. Some of it is full truckload. A lot of it is parcel. We don't offer parcel, but we use FedEx and UPS for the parcel.
So that really leads me to the last and final question, which has to do with capacity and hard assets, truckload, LTL, and so on. The economy, according to several economists, I'm sure you know, here in the States is soft, and it projected to be soft for a while. Of course, the economy in the EU, where you have assets there too, is expected to be soft. And so, historically, those kinds of economic conditions have translated into less of a demand for hard assets like trucking and, of course, related services. So what do you know, since you're betting so heavily on that the rest of these folks don't know in terms of investment in assets?
Well, I would bifurcate the world in stock market and the actual economy. And then they're not always the same thing. So right now, from a stock market point of view, it is weak. It is soft. There's a lot of fear on the street. There's a lot of pessimism on the street. And prices in general are low, particularly for certain categories of stocks. From the economy point of view, Asia is got some issues, particularly China. But Europe is growing. GDP is in the 2+% range. UK is actually growing well. Spain is having a nice rebound. Of course, they're coming back from a period not too long ago that was much worse. So the contrast is big. Here in the States, the most recent GDP numbers that came out just a few days ago were 3.9%. Now, we're not, which is obviously rather healthy and far away from a recession. So it's not contraction, and it's certainly not 2 quarters in a row of contraction, which defines a recession. And when we talk to our customers, including yesterday and today here at CSCMP, we don't hear contraction, we don't hear recession. What we hear is slow growth, modest growth. So retailers, manufacturers are up, but they're up a little bit, 1%, 2%, 3%. That's the general rule. There's a few customers who are growing by leaps and bounds, and it's because they have a special niche or something that they're latching onto that's high growth.
Okay. And then finally, as you look out really for the fortunes of XPO and your customer base, are there any new trends that you see or you'd like to bring to light to our readers?
Well, we've had an amazingly positive reaction from our customers and from our employees, both the XPO employees and our soon-to-be XPO employees at Conway and Menlo, to the acquisition of Conway and Menlo. And I'm very enthusiastic about that because I think we're going to be able to bring to our customers comprehensive solutions that are unique in the industry and that are valued by the customer. And by achieving the size of $15 billion in revenue, we have opportunities to take out massive amounts of costs from the combined organization and pass along some of that cost to our customers. Because at the end of the day, customers in both transportation and logistics want more efficiency. They want lower cost services.
Thank you, Brad. This is Inbound Logistics. We've been speaking with Brad Jacobs, Chairman and CEO of XPO Logistics. Bye for now.